Yep, looks like they're coming in now. So hello,
Okay.
everybody, and welcome.
Hi, everyone.
As people fill in, we'll probably say this a few times, but the way these webinars work, if you should have any questions on Zoom, there's a little Q&A button you can click, and you can type your question in right there, and we'll make sure we answer it at the end of our presentation.
Okay, so first we start with our disclaimers.
All right. So,
Okay.
all right. So just as a quick disclaimer, this presentation is not investment advice. This is not an offer to buy or sell any securities. The information contained herein is believed to come from reliable sources, but we can make no guarantee of its accuracy. Please review our disclaimers and disclosures, our terms of use and service at our website, investorswillow.com/disclaimer.
Excellent.
All right. So,
Okay. So here we go.
Yeah. So I'm Paul Frella, Managing Director here at Willow.
Oh, here's us.
Willow Crypto. And I'm joined today here with Alexandra Dest, our founder and CEO.
Yes, and I'm
Yes,
remote, so hopefully everybody can hear me okay.
Mm-hmm. And
Okay.
before we jump right in,
Go ahead, Paul.
I just want to give everybody a quick overview of what we're going to be talking about today. We're going to start with some updates on adoption and what we see, how the space is growing and expanding. We're going to go over quickly some charts on Bitcoin and Ethereum, touch on the DeFi space and the growth we see happening there, then jump into a sort of broad overview of NFTs, which you may have heard about. We'll get in a little bit there to sort of explain what those are all about. Then briefly talk about DAOs
or not,
or not, or decentralized autonomous organizations and what they have the potential to unlock. Then we're going to touch a bit on regulation in the space and some of the positive things that we see happening, and then go over the direction that the Willow Crypto strategy is heading in. So with that, Alexandra, feel free to kick us off here, and we can jump right into what's happening and adoption in the space.
Okay, great. So for those of you who've been that, one of the things that we've been talking about is for those of you who've worked with us also knows that we have a tendency to be early to the game. You know, back again, I'm going to repeat myself, back when the internet boom started happening, there were a lot of naysayers out there. When Paul and I started talking about crypto, you know, I don't know, 4 years ago, a lot of people thought we were nuts in the head, but we continued to, he started earlier than me, but we started to do our research and start, you know, dabble in it ourselves. And we also had our employees doing the same. So now what we're seeing is that there's truly adoption beginning to take place. And what this lends to us is it shows that our thesis, our investment thesis is now starting to get the rubber's hitting the road. So one of the largest things, and I think this is, Paul, maybe this isn't the largest, but to me it is the second largest US mortgage lender in the United States is now going to accept payments in Bitcoin. You heard me, mortgage payments in Bitcoin. This is, if this isn't a signal of adoption, okay, this is bigger than Tesla's announcement. More people own homes than Tesla cars. So this is a big deal. Also, Walmart's seeking to do something in cryptos. And Paul, there was one other. Oh, Chainlink. Yeah, AccuWeather. Paul, do you want to talk a little bit about what they're going to do with AccuWeather? Because I find this very interesting.
Yeah, so Chainlink is all about this idea of how you bring off-chain data on-chain in order to execute what's called a smart contract. And so where this is all going is that in this specific use case, you can pull weather data into a blockchain to then execute a contract. So if you have a contract that has certain conditions in it that rely on weather data, now you have a way to execute that on a distributed ledger, which is pretty crazy. And where that would actually apply would be for things like crop insurance. Here's a way to say like, okay, if certain conditions are met with the weather, like X amount of rainy days or X amount of rainfall in a certain period or lack of rainfall in a certain period, as long as that condition is met in the contract that you have with your insurance provider, the contract could execute. And as a farmer, if there's adverse weather or something, you guarantee you can get payment from that. And while in the developed world and in the US, this might not be such a big deal. In emerging countries and areas where you do not have the same level of trust and security in the institutions, something like this is massive.
Yeah, and not to mention, like, it certainly there's going to be the big futures and commodities trader guilds, such as Morgan Stanley, such as Goldman Sachs, that will be utilizing, I can't say for certain, but they are the ones who are trading these contracts. So this is going to be a central for that type of activity. But this remains to be seen. But this is one of the use cases that I think we've saw, and then now it's starting to happen. So, yep. Anything I missed there, Paul?
Just that more and more businesses, we keep our ear to the ground. We're seeing more and more headlines of just in general, more companies leaning into this whole space and really starting to explore at a much greater level than even a few years ago. There's been a lot of, I want to say maturity in the space. It still has a ways to go, but there's been many more inroads in terms of the infrastructure that's been built so that institutions now have much more options to, in compliant ways, really step into this space and explore it further.
Exactly. And Swisscom is another one that made a big announcement recently that they were moving to the Chainlink platform as well. So that's the largest Swiss telecom company.
Right.
So,
right.
Okay. So we like to see
and
that
then too,
our
beyond just corporations, there's different country governments around the world too that are stepping in to see how they can explore different ways to tokenize bonds or issue different bonds on these kind of platforms that tie back to government use case. So it's there's some exploration going on, I know, in Hong Kong and Singapore and many other areas too.
Yeah.
All right. So this is more looking at just retail adoption or individual use, and it really has exploded over the past year. The darker countries obviously represent more. If you have time, I encourage you to do a Google search for Chainalysis and type in their Global Crypto Adoption Index. And it is a very fascinating way to see and measure really how many people are actually interacting with this whole world, how many people are actually using the different services that are being built on top of all these different platforms, and how much exchange and facilitation of value transfers is happening too at the individual level and not the corporate level. So countries like India,
always to us, when you start to see the big accounting firms, the big management consulting firms such as McKinsey and so on, looking into these as viable options, when they start plowing.
Looks like we're going to be having a little Zoom connectivity issue there.
Into this, which they've been doing, into the research for this whole area. Okay, next. This isn't the cabinet. Oh, am I? Maybe if I take my. Can you hear me? Okay. You better take over.
Better now. Yeah. So.
All right. You better take over. But if you can't hear me well, you better take over.
Okay. Interrupt me with anything you need.
Okay.
All right. So here's just a chart of Bitcoin. It's logarithmic, so it goes at a base 10 level. And just to show that we've broken above that previous all-time high back in 2008, 17, 18. And now we're kind of floating around this level here. Bitcoin, Ethereum, same thing. To us, this is a generally very bullish chart. So I won't spend too much time on charts, even though they're fun.
Yeah. I mean, but just to not minimize that, charts are a very big part of our work in terms of making sure that things aren't breaking down, making sure that things technically are still in good shape. For those of you who worked with us during the financial crisis and the tech bubble, you know that some of the charts were our leading indicators that there were bigger problems. So we don't want to discount the charts. They're very important in our work, but they're just an adjunct, just an addition to what we're doing. But these charts continue to remain, in our eyes, continue to remain bullish. If we saw it break below that green line that Paul put in there, then we'd have to start questioning whether there would be a bigger break, but that has not happened at this point. So they look very nicely intact.
All right. So now I'm going to talk a bit about DeFi, and what DeFi stands for is decentralized
Thank you.
finance. It is the sort of one of the low-hanging fruits in terms of use cases that can be built with smart contracts on distributed ledgers. So the idea is that instead of going to a brokerage firm or relying on sort of our current infrastructure, these are alternatives that arguably use way less resources, are much more transparent than current systems, and are much more open for people to use. And so when we talk about DeFi, it's sort of in the aggregate of all the different things happening in the space, but basically it's a way for people to utilize financial services, things like lending, or investing in different ways, and generating yields, all these different kinds of investment strategies that you can do on chain. This TVL stands for total.
I'm sorry, just so you know, this is a major potential disruptor in the financial industry as a whole, in banking, in lending. Okay. This is the potential disruption that this can have in industry, which is why you're starting to see industry, like the Morgan Stanleys of the world, starting to plow money into this space, because this can disrupt their business, the way business is done. Go ahead, Paul. Sorry.
Yeah, and to add on that, one of the headlines from before was mentioning that over 55% of the top 100 banks in the world all have some exposure to digital assets. What we see really happening is that the current sort of backend, or the current payment rails and things that we're using, are okay, and they do a pretty good job. In the United States, we've had 50, 60 plus years of use on some of these, like Visa's network and ACH and SWIFT networks and those kind of things. But really the technology that's being unlocked here is almost like a factor of 10 improvement upon that. So a lot of financial institutions are working towards figuring this whole space out, how they can bring it into their business. What this chart specifically looks at is something called total value locked in DeFi, and it looks at how much actual money is locked in contracts on things like the Ethereum network. And so currently that's around $86 billion that is locked on that platform, being used by different people transacting in this whole DeFi space. So it's pretty fascinating to see the growth, how just in September that was below 5 billion or something like that, and in less than a year from then it's already almost 10x in amount of use.
Yeah. So while that's not a big number in relation to the wealth that's around the globe, the growth, again, it's the slope of the curve that always interests us. So the slope continues, okay, notwithstanding some correction here, the slope of the curve continues to be steep.
Right, and this is still in its very early stages. Something else.
Exactly. Yep.
So here, another DeFi thing that we like to keep a close eye on has to do with stablecoins. The idea of a stablecoin is to have a digital representation of something like the US dollar. So it's one-to-one backed by dollars, but instead of being on the traditional payment rails that like the SWIFT, ACH, those kind of networks use, it's instead on crypto rails, right? And so we're seeing this huge build out of just growth in the use of these stable coins. Currently, it's at about 70 or 80 billion just in stable coins.
And so I just want to make sure, I'm going to back up. Paul talked about it's not on the ACH platform. So not on the typical platform that you see when we, like if our clients, if some of you want us to transfer money to your bank, we use the ACH system. That's the system used in banking. So this is a whole other set. whole other way of doing things.
Right. And one of the really unique things about something like this is if you have an address on one of these blockchains, like on the Ethereum network, for example, and I want, and you're on the other side of the world from me, and I want to send you X amount of dollars, I can easily do that with a stable coin, and there's no like money wire or not, or MoneyGram, or all those different TransUnion, all those different systems. You can bypass all of that, and it would cost a fraction of what it would cost to transact, and it would settle almost instantly. I mean, within 15
almost
minutes.
Yeah. So here's the other thing that you need to know. It settles almost instantly. You're going to see the transfer almost instantly. Whereas if you even look at, when somebody transfers money into your bank, there could be a 24-hour hold or even a longer hold on that money. That's not going to happen here. Those banks make money on that float between the time your money hits and the time they allow it to actually clear your account. So again, another disruptor to the industry. So.
Yep. And then this is just a chart I found interesting. It just shows the volume of stable coins that are being transferred each month. And it's I mean, in May, it was almost $800 billion in stable coins that were transferred that month. So it's pretty impressive just to see the growth of this kind of new space, and as it rolls out and more developments happen. Here is just looking.
And another thing I want to point out, you see in May that it spiked. If you remember, that was when in May, it was kind of like the top, I don't want to call it the top of the market, but it was really frothy. And you could see that it pulled back a little bit since. We fully expect this type of behavior in this asset class, which is why it's not for the faint of heart. We fully expect it to be like the Wild West. Okay, that's how
lots
it seems at this time, and until, lots of volatility. So go ahead, Paul.
It's just a chart of users or unique addresses that use stable coins, and it's past 3 million. Just to show since 2019 until today, just how, again, slope of the curve. Interesting metric to watch. Another way to gauge engagement and adoption of this kind of tech. All right, so bear with me on this one, guys. NFTs, there's a lot here. I'm going to try to make it really simple, and we might actually have to dedicate an entire presentation one day.
I think we have to do a whole thing to this. Yeah.
But I'll try to keep it real simple and digestible. So what is an NFT? I'm sure you've probably heard about it in the news. There's, hundreds of millions of dollars have been being spent on things that are potentially just, images on your computer. It might not make any sense. But what is an NFT? It ultimately means non-fungible token. And what is fungibility? It just means like the easiest way to think about it is replaceability. So if something is non-fungible, it's almost like it's non-replaceable, or it has some very unique characteristic that is not shared by anything else. So when you look at something like the US dollar, it is fungible, right? Because my dollar, your dollar, it's the same thing. But if you look at something like a piece of art, if I have the original piece of art, it is unique. Nobody else has a copy of that. So therefore, it's a non-fungible item, right? And so you can apply this to tokens on distributed, like on different blockchain platforms, right? So certain tokens could be extremely unique in that there is that one token represents something that no other token does, right? And so, okay.
This could have a very big impact in the art world.
Yes.
For sure.
Yeah,
okay.
So some of the major use cases for this are in art, right, where you could tokenize a piece of art, and then who has, who has the ownership of it. If it is unique, it can be used in combating counterfeiting, because if you have a line of products and then you attach a non-fungible token to each of those products, you know that they are genuine and that they are not counterfeit or duplications. It can be used for things like sports and events where you can sell tickets, and tickets could be non-fungible tokens where your NFT ticket represents a specific seat or something at a venue. They could also be used for things like licenses and certificates to act as a way to really prove authenticity, that yes, this person actually does have these credentials. Here's the NFT to back it up that shows that proof. Also used for things like collectibles. And then there's this really interesting and emerging world that's happening in what's called like virtual worlds, where things like virtual land and virtual real estate are starting to be developed. And that's a whole other thing that we can get into later. But then also another final use case that I've come across is in gaming, where when people play games, they might get an item in the game, and then that item could actually be a non-fungible token that could then be traded with somebody else in the real world. So all these different use cases in this space. Right now, what we're seeing is really sort of like this mania that's happening where people are buying and selling, gifts or just these images or memes on the internet that they're attaching ridiculous values to. Obviously, that's a bubble, but what this technology unlocks, I think, is just really starting. A good analogy would be something like trading cards, where 10, 20, 30 years ago, people were trading like baseball cards or something, and certain ones were rare, right? So they had or commanded a higher value, and people would buy and sell those trading cards for a premium or for a higher price based on some uniqueness of the card that they had. What's happening now, you could argue, is something very similar to that, sort of like that first low-hanging fruit, that first use case of what this technology can enable. So, and then these charts just kind of show, the first one shows arts, collectibles, and gaming, and just how there's been a lot of growth really this summer until now, that this space has really started to build out. And part of that is because exchanges and the technology behind this has all taken a big step forward, so that it's much easier for people to mint different types of NFTs on these platforms, and then much easier for people to then exchange these NFTs with other people. So technology is moving along. These two charts show that, let's see, the first one's looking at weekly trade volume is around $300-400 million in these things. And then I'm looking at monthly volume in the marketplace. And in August, it surpassed $1.6 billion in marketplace volume. So this is a very nascent and emerging space, but these NFTs, non-fungible tokens, definitely have a real world use case that is just starting.
Yeah.
Yeah. All right. So I don't want to get too far into the weeds with this, but this is a theme that I'm sure we're going to see come up again and again over time as the potential here really unlocks. What is a DAO? Right? A DAO is a decentralized autonomous organization. Another way to think of it is just a digital organization. So now that you have these blockchains, right, they're creating sort of like these whole economies and communities that are built on top of them. You can also build organizations on top of them. And that's really what a DAO is. It's an organization that is essentially run by code. And so a group of people get together, they can set up, how does the operations work? How do we develop this? How do we do marketing for it? How do we do treasury management? How do we govern it? All of these are tools and pieces that are being built on chain that allow people to form organizations. And why this is so interesting is because it, for the first time in human history, allows people to organize in ways that we were not able to organize before, which is just sort of really fascinating concept. And I have a feeling over the coming years, we're going to see some really fascinating and interesting things play out in the DAO space.
Paul, do something, please. Can you just take one of the branches and explain it? So maybe treasury management or governance, just take one of these so that it doesn't become so, abstract, let's say.
Yep. So all of these pieces here are basically tools that people have built out to sort of complement the creation of a digital organization. So if a group of people gets together, they say, hey, we have this idea, we want to form a DAO, and here's the code that's going to govern it. That's great, but how do you do other things like governance? How do we make sure that it's fair, that the people involved all have a say, that the proposals we put in place get voted on, and how is that all recorded, and who's keeping track of all of these things? And these pieces here are all the different tools that are mostly open source, mostly on different blockchains that will allow for that creation, so that you can literally build an organization from top to bottom with all these different pieces. So there's talk in the DeFi space of money Legos, or there's all these different protocols and you can stack them on top of each other to create different strategies for like yield generation, or different types of ways to lend and get paid back. This is a way to do that, except to build an organization, right? So it's basically a way to say, instead of engaging with like a payroll department or an HR department, you could theoretically have those pieces be replaced by blocks of code that do those functions. And so it's really like putting all the pieces together to build an organization in a way that you're not really relying on an individual or trusting an individual. You're trusting the code to do whatever that code's function is that is vital to the survival of that organization.
Awesome.
I hope that makes sense.
There's a lot there, and we can always do just a piece on this.
Yeah, this is another one that could benefit from just
Yeah.
an hour or so just going into it.
Yeah.
So regulation, this gets brought up a lot. And
this is a big deal.
yeah, one of the, I'm not going to get too in depth about, the recent bills that were passed. Honestly, our take really is that, what's going to pass is going to pass, and then there's going to be all kinds of lawsuits. It's very similar actually to the really early days of the internet, where things like encryption were actually illegal. And so how do you securely send an email to somebody when the technology is by law illegal? So there were all sorts of crazy lawsuits that happened in the late 80s and early 90s around this kind of stuff that ultimately led to the internet that we have today. And we fully expect we'll see that same kind of stuff happening, within this year and within the next year, until really it gets sorted out into something that makes sense. But what we
don't necessarily see regulation as a bad thing. Okay. The fact that they want to come in and regulate just has to be thoughtful. Okay, this is always a big word. Thoughtful regulation makes sense. Yes. So we're not against it, we're for it, because then it lends more viability to the asset class. So you can see here, Paul, go ahead. I don't know if I'm chopping up here.
One of the things that we find extremely encouraging is that there's almost like regulatory capture or the revolving door, right? Except now you have people like Jay Clayton, who was the former chair of the Securities and Exchange Commission, just joined a blockchain company called Fireblocks, just joined us on the advisory board there. For someone in that position to move to he could go anywhere, right? Or work for any bank or any major financial institution. And instead he chose to, take his time to advise a company called Fireblocks, who's working towards onboarding institutions into the digital asset space. So the fact that you have these former SEC officials and different officials in government moving into these positions, to us sends a really positive signal that, hey, they're going to push for proper regulation and stuff that doesn't hamper innovation and instead is appropriate for the space to help build it out and let innovation thrive.
Yep. And you can see that a U.S. Treasury official joined Binance for their anti-money laundering efforts, which is great. So more to be expected, I think.
Yes, and so
our strategy.
So wanted to give everybody a quick update on our Willow crypto strategy, and then where we're going to be taking it in the next month or so. Right now, we have pretty good broad exposure to core digital assets like Ethereum and Bitcoin. We have some exposure to the DeFi space, decentralized finance space, and also in the data infrastructure and economy with things like Chainlink and the Graph that provide these core infrastructure services that make this whole space more useful. Ultimately, we see us continuing down that road and expanding each of these sub-strategies under our flagship Willow crypto strategy. So ultimately, today and down the road, where we're going with this is that we're going to have our strategy focused in these 3 to 4 key areas: digital core assets that represent the established platforms out there that have mind share, meaning they have a large developer community. People are actually building on these and people are actually using them. We'll also want some exposure to the decentralized finance space because some of these protocols are extremely useful. And it's one of these use cases that's really, really growing very quickly. So we want some exposure there.
We like that space.
Mm-hmm. And then also the data infrastructure and data economy. These are like the core infrastructure pieces that either make finding data on a blockchain easier or taking off-chain data and bring it on to execute a smart contract. All these different pieces that sort of complete the whole picture of really building out this digital world. Then there's this idea of the metaverse, which is that whole idea of to provide exposure to entertainment gaming and business that's shifting to virtual environments. So that is still, in our opinion, it's a growing space. It's still new. There's a lot of speculation, maybe more so there, but we're thinking some exposure might make sense. All right, so thank you, everybody. I'm going to stop sharing. Looks like we have a couple questions here, so we will get to that. All right. So the first question I see is basics. In these crazy times, how do we invest? How do we navigate and still be safe? What % in the market? What % in currencies? And what % in cash? So that's a great question. So specific to digital assets, one of the rules of thumb we try to live by here is it really depends on what your risk level is. What type of risk you're comfortable taking, and can you afford to take that risk? Next, we would say how much should you be exposed to this space? Really would be determined again with what your time horizon is. And how much risk you feel comfortable taking. But generally, thinking like the 2 to 5% of investable assets seems to make sense. It provides good exposure to this space. As far as % in markets, currency, and cash, well, we can touch on that on our next presentation that we do for Willow traditional asset management. Feel free to reach out after this presentation to me directly, and we can get into more detail there. Okay. So looking at the next one, will the dollar be losing value continually, and what will affect that? So yes, the dollar's value in reserve currency status. So it's a big question. It's something that's for a long time. Alexandra and I have talked about how it's not guaranteed. Alexandra, I don't know if, did you just get back on?
Yeah, I did.
Yeah.
Where did we leave?
Talk about the dollar?
Are we into questions? Oh, the dollar. Okay, so again, for those of you who've been following us for a while, you know that we have concerns about the dollar long term. We don't think it will be the reserve currency long term. We think that eventually there will be a new basket. We're not suggesting it's crypto assets, just so you know. I just want to make that very clear. This is a very different question than crypto. We have a whole philosophy around the dollar. We do believe that at some point there will be a basket. What that basket will be, we don't know. But we think as other economies begin to take over as leaders, and not just, the US's piece of the global economy is shrinking. And as that continues, that puts the dollar at suspect. So I don't even want to have the conversation about the dollar and cryptocurrency because I just feel like it's too premature to even have that discussion. You agree, Paul?
Yeah, I think, you know, macro trends, there's many different forces acting on the dollar. When we look at what's happening with the world, where are we going? There probably will be some type of central bank backed digital currency or something in the future, but it's going to be an interesting ride to get there. Okay, so another question I see here is the SEC guy with Fireblocks, is he basically a highly paid lobbyist? Does his joining that firm necessarily mean his integrity or true caring for the country is present, or is it motivated by profit or something? So
How do we know? We
yeah,
don't know that.
I mean, we don't know for one. But is he a lobbyist in that sense? Yes, he is going to be lobbying on behalf of the crypto industry as a whole to, and you know, especially at a firm like Fireblocks, like their ultimate goal is to increase adoption to this space. So if anything, he would be lobbying for positive regulation in the space.
Yeah, I mean, we're assuming he's lobbying. We can't make that full assumption.
Mhm.
Yeah, I mean, we don't know actually what his role is exactly going to be, but you know, given his previous position, we think he might be on the forefront maybe of some changes.
All right. So here's a good question. It sounds like many of the recent large global hacks have been facilitated by crypto, including one that has resulted in a refund. Please address the significance of this. Yes. So
Yeah.
Is a great question. So hacks happen all the time, everywhere. Think about first how many hacks happen in the corporate world, and you can go on the I believe the FBI's website and see the numbers, and you know, hundreds of billions of dollars get hacked or held for ransom in the traditional world every day. But in that case, nobody is blaming the ACH network for those hacks. Nobody's blaming the SWIFT network or Fed funds wire network for those hacks, even though they're actually the ones who are facilitating the movement of that cash in a lot of those cases. So really, yes, there are hacks happening in the crypto world. They are an extremely small percentage when you look at in comparison to the traditional finance world. It's a very, very small percentage is actually happening on the blockchain. It just gets a lot more media attention around it. The other thing to note there is that these hacks are not at the protocol level for the most part. They're not at the actual blockchain that's being hacked. It's either a third party that has built something on top of it, that someone has trusted their money with that third party, and then that third party gets hacked. So it's important to know that, you know, Bitcoin, Ethereum, these things have never been hacked. And not to say that it couldn't happen down the road, but you would just need an insane amount of computing power that I don't think is feasible anytime soon.
That's great.
All right. So how do you invest in DeFi, Metaverse, et cetera? Glad that you can, however, it's a mystery on how, right? So our strategy, we custody our funds with Gemini Trust Company, LLC, and we have access to a list of digital assets that they have secured on their custody platform. So what we do is we, you know, do our research and vet and find those tokens that represent different protocols or different projects or different platforms that are working in those different areas. And then we buy those tokens that represent them. Most of the time, these tokens are utility tokens in some way. So you need that token to use the network. So the idea is that as the network gets more usage, the value, the demand for the token goes up. Theoretically, the value should too, depending on the tokenomics of the underlying token. Alternatively, too, there are things like governance tokens, where you can own a governance token, gives you a piece of ownership of the actual protocol, with the thought that down the road, those governance tokens will have the ability to alter the protocol in some way to make it so that there is an incentive to have those governance tokens. Also, what's happening a lot in the DeFi space is these different projects are providing their governance token as an incentive to use their platform. So it's all different ways to get involved in that way. And that provides direct exposure to those types of projects. All right. had a question here that said, is the fall of Afghanistan a potentially destabilizing market event for the future of crypto? Or is it one that will likely gather more market strength? So yes, I did see an article recently about how with US troops leaving Afghanistan, government infrastructure, banking, everything's falling apart, supposedly, and that there is a big uptick in cryptocurrency usage, which really makes sense. I mean, and that ultimately is part of what this is a hedge against, right? If a government can't be trusted or falls apart, your money or what you use to live off of a survivor shouldn't be dependent upon that. And so really, I just look at that as something that makes this whole space even more robust. All right. And then a question here about,
Let's see.
what was that?
No, go ahead.
Okay, should investors be concerned about all the noise coming out of Washington and about regulation on the side? So we touched on this briefly. I don't think we should be, yes, there is concern. Yes, we should be somewhat concerned, and we want to pay attention to what regulators are deciding on and how they're being educated and where they're getting their information from, and then what rules they're trying to put in place. But again, we really liken this to the same thing with the internet, as we mentioned earlier, just how certain laws will be put in place that probably aren't favorable, but they will also be challenged by different companies and things like that. So generally, it looks like everything, even though there's lots of talk of is this the best way to, probably not they probably don't have it right off the bat, but generally the direction things are moving are positive. So that does give us encouragement there.
Yeah, and we don't necessarily look at regulation as a negative, as long as it's thoughtful. I mean, but it's a hard, I think this is a hard concept for people to understand. So the biggest concern that I would say is, out of their ignorance, there's regulation that makes no sense, that could shut it down. That would be my biggest concern.
All right, another question we have was, let's see. We've used gold underlying the dollar, and it is no longer true. What underlies the value of crypto? Is it just artificial and created? So this is a great question, right?
Yes.
What underlies the value of the dollar, right? It's the U.S. military, arguably, or is it just the collective agreement that we as a society have to say that, yes, a dollar is worth one, and that. So it's the same thing that gives anything back.
Is it oil? The dollar's so tied to oil. I mean, and it's a collective, right? It's literally, if the collective says that it has value and they deem it as having value, it has value.
It has value.
It's
right.
the same thing this time. I mean, this is the art side of the industry. This is literally the intuitive side of the industry, because you can look back in history. There was the tulip bulbs at one point that had all this value. The Cabbage Patch Kids. I mean, there's some ridiculous things. And it's even with art, even with beautiful art. Beanie Babies, yeah. Even with art, there's all these things, if the collective decides it has value. Tomorrow, if the collective decides that the dollar doesn't have value, so if countries around the globe suddenly get frustrated with the US policies, guess what happens to the dollar? This is, I guess, for lack of a better way to say it, this is what makes everything, in my opinion, very fragile on a lot of levels. So crypto and the dollar, I would say. Right. Can you hear me?
Yeah. Okay. So last question I see here is, why did you select Gemini versus other custodian providers? So that's also a great question. When we did our due diligence and research into the space, there are only a handful of digital asset custodians out there who are currently, operating. And of that handful, Gemini provided us with the most options and didn't require minimums on investment to be a part of their platform. when we looked at someone, well, like for example, at the time when we were looking at like Fidelity Digital Assets, they only custodied Bitcoin. That's it. And then now they're adding Ethereum to that. Whereas with Gemini, we have access to 30 so different digital assets that are available on the custody platform. That on top of, there's insurance that we really liked. Their level of security is top notch. And if you'd like, you can go to our website, willowcrypto.com, click on our FAQ at the top, and there is a whole list of reasons in there as to why we chose Gemini, and it goes really in depth into the different security measures they take, how they do their AML and KYC, all their client onboarding stuff, and then the insurance that they provide over assets that they have custody.
Yeah, and also it gave us a platform to allow smaller amounts of money in as well, which is a big deal because we don't want people to put all their money in something like this.
Right, right.
Yeah.
All right, last question I have here. Is your goal not to be scared by the wolves and sustain client fears that cryptocurrency's volatility is aligned with your indicated investment timeline? So at the end of the day, this technology, the technology represented by this new asset class is really going to have some wild implications and far-reaching impacts on our world. It has the potential to really change how we do business and how we interact really and organize as a society. It can democratize entire new asset classes, adds a new level of transparency that's just not possible with a lot of today's technology, and accountability. So when we look at our time horizon, okay, over the next, and we say at least minimum at least five years, but really ideally that 5 to 10 year time horizon here, that we want to stay the course, we want exposure to this space. We see some real big potential impacts and implications that the space can have.
Yeah.
All right, so let's see. Question here that just came in. Is it possible to cross-reference to firms like Fidelity in terms of what they offer? Basically, do they offer significant research before bringing on board? Like, okay, so
No.
like using a custodian like Fidelity because maybe they offer better research for what they have on their platform. Not really. What we're seeing in this space is that most of these exchanges are just sort of like, I mean, this is mostly towards Coinbase, but they're just starting to list projects and then let people decide, what they want to invest in instead of being the arbiter of, oh, is this a high quality, quality project? So that's where, our own research really comes into play where we're really digging in. We have a whole list of different, on-chain data analytics things that we tap into. Mm-hmm.
Oh, can I interrupt?
Yeah.
We could sell our research to Fidelity.
We could. Yeah.
We for the Willow ESG, literally we have a product to sell to TD Ameritrade, Schwab's, Fidelity of the world. We literally can sell our research to them, not the other way around. Mm-hmm. And I know they're bigger, but the truth is we have more resources that we're using for our research. I don't know if they have, I'm not going to say, I don't know because I'm not in the organization itself, but I can tell you that without a doubt, we can sell our research to them.
All right.
I would agree with that.
Yes.
I know.
So I had, let's see. Okay. Yep. I think we're good.
I think we're good. I think we can have the questions.
Yeah, so feel free to email Alexandra or myself, give us a phone call or reach out to us. If you have any follow-on questions or you'd like to go a little deeper into any of these things, I'm happy to talk one-on-one with anybody about this, like live and breathe this stuff, so.
Live and breathe. All right.